This is John. He currently earns around 300,000 naira a month after taxes. And this is his colleague James. You see, James earns around 600,000 naira a month after taxes, definitely more than John. At the start of 2023, John had about 400,000 naira in savings, while James, of course he earns more, has about 1 million naira in savings. John decided to invest his savings in an index fund, specifically the S&P 500, while James kept his savings in one of his bank accounts. Now, for the sake of illustration, let's assume that the naira sold for around 1,400 naira to $1 over 3 years. Now, between 2023 and 2025, both of them added 10,000 naira each month to the money that he put away. For John, that's 10,000 naira to his index fund, and for James, that's 10,000 naira to his savings. All things being equal, at the end of 2025, James had about 1.36 million in the bank, and for John, with the S&P 500 returning just over 26% in 2023, 25% in 2024, and nearly 18% in 2025 with Vanguard, his final figure will be a little under or above 1.2 million naira. Again, this is if all things are equal. So despite James starting out with a higher base number, John is not too far behind after 3 years of just saving and investing respectively. Furthermore, the value of the naira would have depreciated between 2023 and 2025. So James may not necessarily even have that money that he says he has. This is the basic idea of what investing does for you. However, most people don't understand it, or they don't understand how it works. So to help with this, we're starting a series on investing on the Finance Friday channel. We'll be doing a deep dive into different investment options, how they work, how they make money, and what it would mean for you as a potential investor. So be sure to subscribe to this channel so you don't miss any of the videos. The best part is that we'll also be investing 100,000 naira every month, and we'll be showing that publicly on this channel. We'll be investing that throughout this year, and we'll be giving away another 100,000 naira to a random subscriber every month. So make sure you're subscribed to the Finance Friday channel here. More on that later in the video. Before we begin, please note that none of this is financial advice. It is for educational purposes only. If you want to be certain about your own personal finances, it is recommended that you consult a certified financial advisor before you invest. Without further ado, here's everything you need to know about the world of investing as a beginner. At its simplest form, investing is putting money away into something outside your bank account and is expected to grow in value over time. Keep in mind that this is very different from a get-rich-quick scheme, it's different from gambling, it's different from trading. Investing at its core is supposed to be a long-term plan to grow wealth and reach financial freedom. I want you to think about it like planting a seed for a mango tree, for instance. While in its final form, it is a huge tree with a ton of great fruit, but within 1 week or 1 month, you don't expect to have a whole tree that can even cover you as a shade, let alone bear meaningful fruit. However, when you care for it, when you water it, when you stay with it after some time, it will typically grow into something that you can enjoy on an even longer term basis. Okay, so that makes sense, but why? Why do people invest? There's this common notion of the melting ice cube. The question goes, have you ever placed an ice cube in the sun? I mean, even if you have not, you already know what will happen if you did. The ice will melt. No matter how big the block of ice is, it will eventually melt on that hot sun. Your money is like an ice cube. When you leave your money dormant, maybe in a safe, under your bed, or in a regular savings account, that is the very definition of placing an ice cube in the sun. Because over time, due to economic factors, bank charges, and of course, inflation, that money will just lose value sitting in your account. This is why most people are advised to invest their money into something. The real problem with investing, especially if you do not have a lot of extra income, is that most people expect it to yield very quickly in 1 week or 1 month. However, like I said earlier, the sensible way to benefit from investing is to give it time. A lot of time sometimes. With that in mind, let's now talk about the 3 most important factors that will determine how much and what you invest in. The first one is something you may have heard of a few times if you've ever looked into investing: risk and reward. One of the most common ideas when it comes to investing is that the higher the potential reward of an investment, usually the higher the risk involved. Now, this is where I have to point out that if an investment offers a very huge percentage in returns and tells you that there are no risks attached, that is a red flag. Run, oh.
Run, oh.
So the very first step before you even decide what percentage of your income you put into any investment is you must first decide your risk tolerance. If you are too scared to lose money to an investment, chances are you should not be investing in it. Although you have to keep in mind that investment options that offer low risk or low risk levels often don't have the wildest margins when it comes to returns. This will then also determine just how much of your income you are willing to put into it. Generally, the rule of thumb is to use your extra income after sorting the most important parts of your life. Don't use money that you will keep going back to look for. This also applies whether you do low or high risk investments. This then brings us to the topic of diversification. Everyone knows that it is not safe to place all your eggs in one basket, and the same thing applies to investing. Even if you decide to place the large chunk of your investment in a particular place, it is highly recommended to diversify. So what this means is spreading your investments across different asset types, different companies, and even different industries. Whatever you do though, make sure that no singular investment has enough power to wipe you out completely. You still have to have enough to play the game. You need to always have other investments to fall on if one investment fails. Hopefully not. Time versus timing. One very big problem with trying to invest is that you are waiting to buy low so that you can sell high. That is not how investment works. Trying to time the market will often leave you with more losses than wins. Just leave that for the traders. This does not mean that it is impossible, but depending on the assets, there are very few cases where you can successfully predict what will happen in the market. This is closer to what day traders do, but as you may already know, that is a very risky game, and the chances of losing money are equally as high. So rather than trying to time the market, if and when you decide to invest, it is better to give the market time. So if you're considering investing, conclude on a long-term view even before getting in, which then brings us to why time is the most important factor in investing. Let's talk compound interest. You've definitely heard of the word compound interest. It is often referred to as the eighth wonder of the world in the world of finance. And if you've ever watched a video or read a book about investing, you may have come across this word like 100 times. Why? Well, because it is the most important factor when it comes to investing, at least long-term investing. Compounding when it comes to investing is a repetitive process that can multiply the little effort that you've put in over a long period of time. So look at this. If you invest $100, the Naira approximation will be on the screen here. But if you invest this amount of money into an index fund that averages 10% return in the next 40 years, by the time you are ready to retire, that amount will now be approximately $630,000. The longer you keep the investment, the more money it multiplies into. But here's the pretty mind-blowing part. The amount you invested in those 40 years comes to a total of $48,000. You made over $600,000 from $48,000. So while normally it looks like 10% over a long period of time, it is actually so much more. So now that you have a basic idea of how it works, here are a few options that you can consider if you are looking to get started. Let's talk investment options. The first one is stocks. It's pretty much the poster boy for investment, and sometimes the only one that people think about when it comes to investing. Basically, you are owning a piece of a company. The good thing about stocks is that the growth potential is very high, especially if you stay patient. On the other hand, one of the biggest cons is how volatile stocks can be. It can be high one day and it can be low the other day. So if you spend time monitoring stocks, it can probably give you a heart attack seeing the money just go up or go down. The profits that I made from stocks are what I actually used to get my car and help fund the house that we bought. Next, bonds. Also quite popular, but very few people get into it. It involves lending your cash to companies and governments. The advantage of investing in bonds is that it is generally more stable. In fact, it is considered one of the lowest risk investments that you can make. However, as I mentioned earlier, lower risk also means that the returns are lower, or you get your returns much later, a lot less than what you would get from investing in stocks. I see a lot of government bonds in Nigeria and they do play well, but for some people, you have to hold it for 10 years and the minimum investment can be very high, like 5 million, 50 million, 1 billion naira for government bonds, but it pays well. And one other investment that sort of looks like bonds in this way, I'd say, is I invested in a friend's company via commercial paper, which is a promissory note. And in around 6 months' time, you get a 10% return. You actually get your 10% return. and then you get your money back. You also have mutual funds and ETFs, exchange traded funds. Here you're offered a large pool of assets to buy once. It is usually great for diversification and also offers you professional management of your assets. The only thing here is that sometimes ETFs come with extra fees. The popular ETFs you may know, VOO, Vanguard's S&P 500 ETF, it returned around 26% in 2023, 25% in 2024, and 17.9% last year, 2025. But past performance is not going to dictate future performance. You already know that. You also get other options like real estate and many more. One other investment I always talk about is investing in yourself. Reading books, improving your mind, improving your skills, being better at what you do, and earning more. That way you can actually get more to invest in these other assets that we've mentioned. When it comes to investments, it is very dependent on you and 3 other factors that we mentioned earlier. So throughout this series, we'll have each episode dedicated to a specific investment type, and we'll break down everything from risk levels, advantages, how they work, and how you can start investing. But to help you get started, we'll also be investing 100,000 naira every month for the next year and giving out 100,000 naira every month to you, to one of you. There will be monthly update videos about the investments that we make and how they are doing. This is all, again, for educational purposes. Let's even see how we can do. You can also use this opportunity to set an investment goal for yourself. Yours can be 10, 15, 20,000 naira or more, depending on what you can afford, based on the risk level you are able to tolerate at this time. Please note that I'm not collecting money from you. I'm not creating any group. I'm not asking for your personal details. Please beware of fraudsters who may want to collect money from you or your personal details. I won't be in the comments asking you for anything. I'll never ask for such on my YouTube comment section. The app I'm going to be using for this is Bamboo, but you can also use an app like Trove, which I've talked about on this channel several times. They have a very nice interface as well. Both of them have good interfaces. I'll also be picking one person each month to give 100,000 naira to invest in. So don't miss out. Be sure to subscribe to the channel. I have links to the apps in the description below, and I'll have more details as time goes on as you are following along on new episodes. But while we're talking about investments, you may also want to check out this video where we discussed all the most important tax and cash policies that could cost you some money. I'll see you in that video.